Hey guys, Chat Trades here. So over the past few weeks or so, I've been trying out the super accurate MACD trading strategy. And keep in mind, if you're just relying on a buy signal from the MACD or a sell signal from the MACD, you're probably going to get stopped out a lot of the time. So what I want to do in this video is not only show you how the MACD works, but also these three other principles that we need to apply to the MACD indicator. So since I've been trying this, I literally have not had a red day. I've had a few red trades, but overall, my day has been green over the past 7 trading days. So with that being said, super excited to share this strategy with you guys. Like I said, MACD is an awesome confirmation if you apply these 3 other things. Let's dive straight into it. All right, as you can see, I used this exact strategy today on my Apex accounts. I actually took 2 different trades. So we had one trade where I made 200 in 5 different accounts, and then another trade where I made 106 in 5 different accounts as well. So in total, I'm up around $1,500 on all of my PA accounts today. Now let's go ahead and go into this MACD trading strategy. So like I said before, there's 3 things you really need to apply to any indicator, in my opinion. And this is going to make it so you actually have an edge. You'll start getting to a win rate where you'll have, 70 to 80%. So if you just use the MACD, you're probably going to have, a 40, 30, 50 win rate, depending on what you're trading. But I'm telling you guys, if you apply these other 3 things and use MACD as a confirmation, your win rate's going to really start to go up. So this first thing is obviously the trend. You hear it all the time. The trend is your friend. You want to trade with the trend. Don't go against the trend. You want to follow the momentum of the market. That will automatically give you a higher probability of taking trades. And if we're going up and the MACD is giving a buy signal, right, that instantly increases your probability of winning a trade. Okay, that's what trading is all about. Next thing is volume. Now, the main reason we want to trade when there's high amounts of volume and the MACD is lining up, right, is because volume shows participation in the market, right? So it's all kinds of buyers and sellers stepping in, and it's also a great place to put your stop loss, right? So if you put your stop loss below where all the volume was, then chances are those buyers or sellers who made all that volume is going to protect it if we retest. So it's a great place to actually put your stop loss. Now, the next thing is levels. Okay, if we're trending up, but all of a sudden we're getting into a supply zone or a big resistance area, then you kind of want to understand that, okay, maybe I shouldn't take a long here if the MACD is giving a buy signal because we're at a key resistance level. So the levels are just trying to tell you where to hold your trade or where to potentially not take trades, right? And that's why if you use these 3 things, you can see it's automatically going to give you a way higher probability of winning your trades using the MACD buy and sell signal. So now I want to show you some of the trades I took today, this morning, using this exact MACD trading strategy. All right, so if I pull my charts here, we are on ES. This is the S&P 500. This is what I like to trade normally. I have a 5-minute time frame on the left and a 2-minute time frame on the right. Now, if we look at today where the market opened, right, on the 5-minute, as you can see, the trend was obviously up, right? We bounced off our demand zone and we're consistently going up. Now, what happened here is when the market opened, as you can see, let's just go into the 2-minute, we started getting some selling. Now, this is very common. Typically the first 30 minutes of the market opens because it usually tells you what's going to happen the rest of the day. All right. So what happened here was we sold off. We know the trend was up, right? So I'm not going to go short here because I don't want to go against the trend. As you can see, what happened here is we started pulling back, and what happened on these 2 candles you can see right here, right? We had massive volume come in, right? We had just as high as volume as the opening candle. So when we started getting the selling pressure, what happened is buyers started to defend. They didn't want the price to go down anymore. So once we got all this volume kicking in and we failed to go down lower, right? What does that happen? That automatically squeezes the price up. Okay, so going back to our sheet here, right? We know what the trend is. We know that a bunch of buy volume kicked in on that initial sell-off, and our supply zone was pretty far away. So we didn't really have to worry about our levels too much. Plus, we also were in a pre-market support area. So this is a level we could recognize a little bit. Now, the last thing I was looking for right here was I was looking for MACD as a confirmation to actually enter my trade along with a green candle. Now, since we sold off so fast and we started getting bought up pretty quick, the MACD didn't really have time to catch up. As you can see, basically what happens when this starts crossing, right, this blue line crosses the yellow line, that gives us a buy signal for the MACD. Right now, by the time it crossed, we were already up in this area. So just in case sellers stepped in again, I didn't want to get in because the risk reward was very bad. I would have had to put my stop loss below the volume. So the risk reward just wasn't worth it. So what I decided to do is I went back to the trend, right? I want to see the trend continue to form. So how do we know if the trend continues to form? Well, we keep on making higher highs and we keep on making higher lows. Well, that's exactly what happened, right? Once we broke out of this, right, we made a new high on the day. We made a new high from the pre-market. So as you can see, we broke out, and then what did we do? We pulled back once again, and this gave me the confirmation to actually get into the trade, because what do we see again, right? We sold off, and what happens? Big volume starts stepping in, and this candle kind of closed as a reversal candle. These are Heikin-Ashi candles, but if you look at the normal candles, it still kind of closed with a wick, right? So we know all kinds of buyers started stepping in here, defending the trend. If you also look at the 5-minute time frame, as you can see on this pullback, it lined up right along with this 5-minute EMA. This is a 21 length EMA. From here, I kind of saw the MACD was still in a buy zone, right? This blue line was above. You can also look at the histogram. The green bars are consistently going up. And then on a 2-minute time frame, as you can see, MACD got close to a sell signal, and then it started bouncing off of that. So basically, as soon as I saw this green Heikin-Ashi candle on the 2-minute time frame, this is when I actually entered the position. So I believe I got in at around 219, and I basically rode this up to 224, and then I fully exited my position at around 227 on this initial leg up. Now, the reason why I got out of this trade was because this was a resistance area I had marked. Obviously, we broke through it, and now we pulled back to it, and now we're bouncing off it again. But just in case a bunch of sellers stepped in, right, I want to respect the principles that I trade with, which is the levels, right? That told me to kind of get out of the trade. The volume told me where to put my stop loss and be able to get in on that pullback. We saw that buyers were defending the trend, then obviously we knew the trend was up. And the MACD acted as a confirmation telling us that, you know, we're still in that buy signal from this original pullback where we crossed way down here. Okay, as you can see, it never crossed below. We're still in this buy signal the entire time. Now, the second trade I took this morning was on gold futures. Now, keep in mind, I'm a little bit new to trading gold, so I did size down a bunch on this. That's why I only made $100 on 5 accounts. Still a $500 trade, but as you can see, it was basically the same exact setup, right? What I'm doing is I'm looking at what the trend is. I'm looking at where the volume gets protected, right? Where are buyers defending based on this trend? Okay, so we know the trend is up. So we got to see, where do buyers defend the trend? Okay, and then we want to look at the levels and use MACD and a candle as a confirmation, right? Very simple. So first thing we know is basically, if we kind of zoom out here, trend was up all pre-market and during the market open. Then what happened at around 9 o'clock Eastern time, we started to sell off, and we sold off right to this previous support in pre-market. This also lined up with this VWAP area. Now, if we go into a 2-minute time frame, right, we zoom in here more. As you can see, what do you notice about when we start selling off, right? Because again, this is going to tell us when we could potentially start looking to enter the trade. This is going to tell us where we can put our stop loss, right? What do we notice here? Big volume starts stepping in, right? All kinds of buyers are defending this trend, right? They're defending the sell-off, and that's why all kinds of volume comes in, right? We see a nice little wick here. We start trading sideways after that high volume. So this low is a great place where I know buyers will potentially defend my position, right? So this is where I could put my stop loss. Okay, so we know the trend is up. We know a bunch of volume just kicked in. We didn't have any resistance for a while, right? And we're at pre-market support. Our next resistance was way up here. So now, basically all I'm looking is for a MACD confirmation and a 2-minute green candle, right? Since we're trying to take longs here. So what do? We start trading sideways, let the thing consolidate a little bit. The MACD kind of helps us know when we're ready to really get that push up. So as you can see, MACD started crossing right here at around 9:30 Eastern time. We got these green candles. This is where I went ahead and entered my position. And basically, I just rode this thing up over to where we had aggressive selling right here. Obviously, I could have held this longer to our resistance and even to new highs. But again, this is like my 3rd time trading gold ever. So I'm just trying to get used to it a little bit more, get my feet wet. So I got a little scared to hold the trade all the way through. But the confirmations were there, the principles were there, and that's the most important part. So guys, when you see all these different indicators and new strategies on YouTube, you see this all the time, don't get fooled by just the confirmation. Whatever people talk about, whether it's a moving average, a MACD, an EMA line, right? All these different indicators out there, remember, they're just confirmations. You want to always apply the principles. And for example, I can relate it back to losing weight. What is the principles of losing weight? Eat less, eat healthy, and move more. Those are the 3 principles of losing weight. Now, the MACD, or all the different indicators you see on TradingView or on YouTube and all the indicators out there, right? This is kind of like, if you compare this back to weight loss, this is kind of like, okay, what kind of food are you eating? Okay, what kind of exercise are you doing? So sure, there's certain exercises that are more effective than others, but if you exercise and you don't eat so much and you eat healthy, right, you're probably going to lose weight. But then you can start looking at, okay, maybe I should not eat this food. I should start eating more of this food. Maybe I should do more of a keto diet. Maybe I should start doing more cardio, more strength training, right? That's kind of the confirmation when we relate it back to trading. Okay, but the principles of trading, the trend, volume, and levels, right? That's the core things that really matter with any indicator you use. And real quick, guys, before you go, I want to invite you to join our free Discord community. Inside of here, we have all kinds of other members that you can chat with, sharing your trades, all the different stuff. And also, I post my levels every single day on the NASDAQ market and the S&P 500 every single day right before the market opens. So you'll be able to see exactly where my levels are. I share my trade recaps. We have all kinds of resources and all that good stuff. So like I said, if you guys want to join this community, it's completely free and open to the public. We don't charge any money. All you have to do is go to the first link in the description below, or just head over to this link right here. With that being said, guys, as always, I hope you enjoyed this video. Let me know if you have any questions in the comments below. And as always, I will see you in my next one with another day trading lesson.